I'm Gwen Preston. I'm the Vice President of Investor Relations for West Red Lake Gold Mines. West Red Lake Gold Mines owns the Madsen Mine project, which is in Western Ontario in the famous Red Lake District, which has lots of gold. Lots of gold has been pulled from the ground there. We have a high-grade resource, and there is a mine mostly built on that resource. There's an underground mine with 2 declines and a shaft. There's a beautiful, almost brand new mill that works very well. All the permits, all the infrastructure that you need for mining. My company bought that asset out of bankruptcy about a year ago, and we are putting it back into production by the middle of 2025.
And that's just the beginning. It's just the beginning. Gwen, lovely to meet you, because we've never met before.
I know. We've known of each other.
We have. So you made the leap. You've gone from the dark side over into this venture. I mean, it's quite an exciting venture.
It is.
I spoke to Sean recently. Tell me why you made the leap, though.
Absolutely. So yeah, I was for the last 10 years, I've written a newsletter to help investors try to make money in the metals and mining space. I wrote about what I invested in. So I visited this project as an investor last summer, shortly after they'd bought it. And to be honest, when they approached me with the pitch, we're a new team, we're going to make work what failed under the last guys, I was like, that seems a little too good to be true.
Yeah.
But then I went to the project, and it just validated everything. Not just because management said those things again, but because they'd restaffed the operation with a lot of people who had worked through the pure gold days. And those people, from literally the person, who cleans the mill floor through to the superintendent, they all reflected their experiences with pure gold. And they all told the same story, that there was just mismanagement, there wasn't a focus on operational excellence, there wasn't enough experience in operations, and the way that it was financed, there wasn't enough money. Everybody was always scrambling to try and, make things work, pushing costs into operating, and then making last-minute decisions for where to mine and how to mine. And it all added up to a project where the rock getting to the mill was only about half the grade that it was supposed to be. The mill wasn't doing all of the things that it could have done, and the operating costs were way higher than they were expected to be. And when I realized that those were all fixable problems, the gold is in the rocks, and you can get it out of the rocks, it's there. The problems were fixable ones. Then I started to pay attention to the story.
Okay, well let's talk about that, because buying something cheap is the beginning of an opportunity, but you've got to get the right things in place. As you say, you're talking about some of the fixable things there. Let's look at that in terms of where you are today and what you think you're going to have to do this year. Absolutely,
yes. So this is I feel very lucky to join the story right now, because the team spent the last year really analyzing the operation, identifying where things had gone wrong, figuring out what the fixes could be, and then deciding on which fix choices they were going to make. The next year is all about implementing those fixes. All the while, they're doing lots of drilling. That's an ongoing process. They've refined the geologic model.
Why the drilling?
So one of the big things that happened is that this capital-constrained company, Pure Gold, decided to start mining in an area that they didn't understand particularly well. They had drill holes into it, for sure. They had a resource. But the drill holes were spaced 15 meters apart. That might seem close together, but when you're working in a very high-grade, veiny system like Red Lake, it's not anywhere near. You need like 6 to 8 meter spacing. So when you have relatively widely spaced drill holes, you just run the risk of not actually knowing where the gold is.
Right.
Then if you add on to that a lack of operating expertise, they chose a mining method that wasn't particularly appropriate. So not only did they not know exactly where the gold was, they were also over-breaking, which means they were mining a bunch of non-mineralized rock, which just dilutes the mineralization that you are pulling out. So you take a poorly understood system and you do an inappropriate mining method, and that's how you end up taking mineralized material to the mill that grades 3 or 4 grams instead of the 8 grams that the feasibility study had anticipated.
I remember.
You did a good dissection of this.
Everything looks wonderful with hindsight. It's easy. So, some companies feel under pressure to kind of rush things forward because the market isn't rewarding them for things they want to get rewarded for, and capital gets a little bit more expensive and harder to come by. We understand all the mistakes. The opportunity is looking forward, right?
Yeah.
So, infill drilling. Fantastic. Number one. How much more of that are we going to do before we understand better how to start mining this thing?
So the idea is to have a year's worth of defined stopes. So it's about literally planning out a year's worth of mining, stope by stope, exactly what that mine plan would be. And the work has been underway on that already. We're planning on doing another 50,000 meters of drilling over the next not quite year. Some of that, about a third of that, will be on exploration, but the rest of it is all on that, making sure we know exactly where the gold that we're going to mine is.
Right, and that's fully financed, right?
Sorry?
Is that financed? Have you got the money
Yes,
now to be able to do that?
we have the money now to do
right?
that. So we have $50 million in the bank right now,
Right,
which is much more than we need just for the drilling.
No, but it's kind of interesting because obviously, the Great Lagoons have jumped on this and wanted to be associated with this because the opportunity was pick something up cheap, like cents in the dollar, cheap.
Yes.
And you've done that, but having this money, especially in a market like that, I guess there must be great expectations as well.
Yeah.
So what have you got to deliver?
So this is an interesting thing. So we picked this asset up, like you say, pennies on the dollar, invested. $350 million invested. We bought it for $6.5 million. So yeah, we bought it cheap. The market, like you say, wants everything to happen quickly and easily and for not a lot of money. We've raised $100 million over the last year so that we can do the work that's needed to turn what was a bankrupt mine into a profitable mine that we're, proud to operate and confident in. And so we are implementing all of the fixes that are needed, and we can go through a whole list of those. But that's the work that's underway.
I think the big thing there is, and you said it, and it's easy to miss, it's like, this isn't a case of rebuilding a company and hoping to play the equities market. This is, we've got to build a mine. We've got to get economic grade gold out of the ground. That's the pressure on the shoulders, right?
Yeah, absolutely. And I think that's the pressure on the shoulders. We know the gold is there. We need to get it out of the ground efficiently. So that requires the right mining method, and that requires a well-designed underground system, and it requires a good mill. We have a very good mill, but there's tweaks that need to be done there. And it requires a mine model that we have a lot of confidence in, the resource model and all the infill drilling.
Right. And obviously, high-priced gold environment really helps.
Yes,
in terms of momentum, belief, interest, etc. I know you've got the money, but it's your role really to lay out, give us some kind of guidance to what you're going to deliver this year.
Yeah.
Tick those off as you deliver them, and give us some sort of schedule as to when you think you can get this thing going. I know when I've talked with the company in the past, like, we're not going to be rushed. Yeah. Made mistakes. We can't afford, quite frankly, to make another mistake, another misstep, shall we say. And so what's the kind of game plan in terms of actually being able to start mining again? Have you got a date yet?
Absolutely. So we are saying that in the second half of next year, we will be mining. We can't talk about the numbers, the ounces that we'll produce or the cost or anything, because we need a pre-feasibility study for that. But that's another major catalyst for us, is that by early 2025, we are going to issue that pre-feasibility study.
Right.
As we lead up to that, we're not just waiting until the study's out to start doing a bunch of the work that is needed for the restart. We're going to do a bunch of that work. And that's the news that we just put out. We're going to do a bunch of the work leading up to that pre-feasibility study. We're going to drive a 1,200 meter connection drift that connects the east and west portals in the mine that weren't connected before. So it created a lot of congestion issues. It created ventilation issues. It meant that we had to cross public roads to get ore out of one side, all kinds of problems there.
No.
We're going to do a test mining program. We're going to do a bulk sample. We're going to do all of this drilling. We're going to buy and install a primary crusher, which was one of the things that was leased before. There's lots of things that we are doing to make it so that once we issue that pre-feasibility study, a good chunk of the work that's done that's needed to restart this mine will already be done or very clearly underway, so that we can absolutely get to that goal of being in production in a year.
That's a great example, a case study of, look, it wasn't the asset, it was the operating team. So for instance, you talk about that crusher, leasing something for almost what you could buy it for.
The numbers are crazy.
The numbers are crazy, right? So it was always about the money. It was never about the asset. I think that's really important for people to understand, right?
They really wanted to squish the amount of debt that they had, because they wanted another company to buy them. And companies don't like buying debt. So they really wanted to have just the tiniest bit of debt. But building a mine with not enough money is a very dangerous thing to do.
Yeah.
And so one of their answers to that was to kick as much cost from capital into operating as possible.
Right.
So they did things like lease a primary crusher. A primary crusher costs roughly, I mean, $1.5 million to buy, more or less, depending on what's added. And however, they were spending, $600,000 a month to lease it. So that's the kind of addition to the capital cost or the operating cost.
Let's go with naive. That's a nice polite word, isn't it?
So yes, their costs were really high because of some of the decisions they made because of that squished amount of money.
But I guess where I'm going with this, and having sort of looked at it and obviously spoken with you guys before and spoken with you, is we appreciate the asset is good and you're going about it the right way and you're unpicking a bunch of stuff and it's all fixable. And I kind of like that. So I think the market, I hope that the market gives you time to be able to do those things. So back on the question of we'll be mining the second half of 25, that's not say first pour per se, is it?
Well, we're going to do test mining. We're going to be pulling mineralized material out of the ground before that. We're kicking off our test mining program quite soon.
Okay.
But turning on the mill is we want to turn on that mill ready to be fed almost all of its 800 tons a day. So we're going to get ready for that. And we're going to be pouring gold in the second half of next year.
Good stuff. Well, look, I look forward to hearing all about it. Thank you very much. I loved to meet you.
Likewise.
Cheers.
Absolutely.
Okay.